morning, everybody, or good afternoon, or good evening. I'm delighted to be here this afternoon with you, and I'm. I'd like to thank the Cambodian Association for FinTech, including Bina and Thomas, for inviting me to do this talk. So I'm going to talk a little about how pensions, what the importance of pensions is, specifically from a Cambodian perspective, and give you a flavor of what has been the experience in this area in some other countries. But before we think of a solution for Cambodia, I think it's useful to take a step back and think a little more about what the initial conditions are in which we are thinking about, a pension inclusion, which is also something that the Ministry of Finance and the central bank in Cambodia are thinking. So let's just take a step back and think of, what are the initial conditions under which we will be attempting pension inclusion? And the second is, what should therefore be the considerations when we think about designing the features and functions and the architecture of this pension program? So, and I've got a few checklist items here. So one is labor markets themselves. On labor markets, what we are seeing is that we're talking about a fairly large population. I mean, out of the 10 million odd people in the workforce today, half of them are women. But unfortunately, from a pensions point of view, most of them are in the informal workforce, and therefore they are non-salaried, and therefore it's more difficult to be able to deliver a pension program to them, which traditionally is delivered through employers in most countries. The second challenge in the labor market is that there is a fair amount of, in addition to the informality, there is also a frequent migration across jobs and locations that people face. And as a result of which, any pension solution for Cambodia clearly needs to be a portable solution, where I, as a worker, when I open a pension account, then the pension account should move with me regardless of where I live or work over a period of time. The second consideration is around demography. And I think there, the glass is more than half full, and I think the situation is very conducive to launching a pension program in Cambodia. Because if you see, then we're talking about a fairly young country. I mean, the median age is only 25. But the flip side is that there is also simultaneously a fair amount of increase that we are seeing in the elderly population, which is actually which is a result of a radical jump in life expectancy at age 60. And over the last 10 years, I think we've seen in Cambodia almost 40% of a rise in life expectancy at age 60. So today, if I'm a citizen in Cambodia, I'm likely to be living for at least between 16 to 20 years after I become old or I exit the workforce. Therefore, I need to accumulate enough savings to support consumption expenditure till then. The third area is around incomes, which frankly is not very different from the incomes we're seeing in India or in Africa or in neighboring countries like Bangladesh, etc. And there does seem to be, I think, a fair amount of, the good news is that the population below poverty is actually quite small. It's about 12 to 15%. So therefore, clearly there is a fairly large segment of the workforce which is above poverty, economically active, and is young enough to be able to support some meaningful pension contributions. The better news that I see in Cambodia really is around social media and the digital environment. And what we are seeing is that there is a very large population of people. In fact, almost everybody in the working age and in the workforce is already very actively using social media, and a lot of them are using mobiles for accessing social media like Facebook, Instagram, etc., etc. But on the financial inclusion side, we see some challenges. One is that we are seeing that there are only about a quarter of the workforce is below the age of, has a account with a formal financial institution. So that's only about a quarter of the population. On the insurance side, and the pension side, I think the coverage is actually very small. So you've got, and this is not very peculiar to Cambodia. This is something that we've seen across the world. So less than 10% of the population, including the people covered by NSSF, have some form of insurance or protection against risk. And pension inclusion is actually nearly negligible because only civil servants in Cambodia have a pension available to them. But at a headline level, I think two important things that come out is that at one level, Cambodia is actually very early in its thinking around an inclusion or an inclusive pension arrangement from a demographic perspective. So the population is still young and therefore has enough time to be able to accumulate meaningful savings, even with fairly tiny contributions or small contributions. But equally, I think Cambodia is also late to a certain extent. When I look at from the work that is already happening globally on pension inclusion, but that's also a sort of a positive because we are increasingly seeing that the lessons that, let's say, India or countries in Africa or other places are doing this. We are seeing that there is already a fair amount of learnings that Cambodia can leverage, and therefore it doesn't have to learn from its own mistakes. It can look at what other countries are doing and adopt solutions that have worked well and avoid mistakes that other countries might have made. At the level of this is really a sort of a snapshot view of Cambodia when it comes to the problem of old age poverty and the opportunity that the government and the citizens really have at this stage if some meaningful and effective action was to be undertaken. On the pension coverage side, I have just said, what we're seeing is that barely 250,000 people who are mainly civil servants are really participating or are eligible for a pension. About 9.5 million people in the workforce are currently excluded. Of them, about 1.5 million maybe just below the poverty line and therefore may not be able to save at all and will therefore need to depend on government support when they're old. But there is clearly a very large part of the workforce, which is about 8 million people, who are not below the poverty line and are economically active and are young and can therefore afford to save. Now, if we don't do anything, the problem will be that, say, 2 or 3 decades out, Cambodia will have about 5 million people who will be above the age of 60. Nearly all of them will not be getting a pension and therefore will face almost 20 years of fairly extreme poverty, which could increase the poverty levels in the country. And at that stage, for the government to step forward and provide even a modest, let's say even 50% of the current minimum wage as a pension through tax revenues could consume, let's say, 200% of the tax revenues of Cambodia in 2019. And which could be about $5 to $6 billion per year. And therefore, I think not only is this going to be challenging, but it's also going to be at the cost of other government expenditure in development and infrastructure and health and education and so on and so forth. On the opportunity side, I think if we can get this to, get our act together in Cambodia, and if we can motivate young people to start saving, then even with very modest contributions of, say, $10 to $15 a month, a person in Cambodia, by the time he or she reaches age 60, should have enough savings accumulated to get a monthly pension, which would be at least at the level or maybe more than the current minimum wage that we're seeing. And I'm talking 2020 prices. So clearly, it makes sense from an individual's point of view to start saving for old age. Even at a country level, if I was to think of this at a fiscal level, if even a 10% of the currently excluded workers who are able to save actually do open a pension account and start saving the same $15 a month, it can help to generate $2 billion of new long-term savings over the next decade. So in a nutshell, I think for Cambodia, as is the case for India or Bangladesh or Kenya or Rwanda or Peru, I think the only sustainable option seems to be for governments and regulators and financial inclusion stakeholders encourage thrift and self-help for old age. If that is the case, then, and if we are already committed to financial inclusion, then why is it that nothing significant has happened in putting a dent into the pension exclusion problem in Cambodia? So at one level, I think it's to do with the ecosystem itself being fragmented. So we're looking at Cambodia moving towards a digital ID. There is, like we have discussed, There's a lot of social media usage. There are well-regulated financial institutions who are there. But somehow all of this doesn't seem to come together naturally by itself to solve the retirement savings problem of Cambodia. And I think here what we are doing in different countries as well is simply using pension tech or technology which is specifically developed for pension inclusion, and using that as the glue to integrate the ecosystem and bring this together in a single window, and to be able to create what I would call, say, a digital micro-pension marketplace, which then can be, it's like setting up a Gmail system in Cambodia, where any citizen in the country is able to use any device to open a pension account using that marketplace and then operate that account, get information, check balances, and so on and so forth. So this doesn't exist, and I think tech can help to address this problem of ecosystem fragmentation. The second challenge that we find is around commercial viability. Now, traditionally, all financial services seem to be sold mainly through agent-led models. So, but unfortunately, when we are dealing with small ticket, savings or small value pensions, agents don't really have enough incentives because their incentives are linked to the value of savings. They don't seem to have enough incentives to go out and sell financial services to the poor, and which really is being the case worldwide. So agent-led models have never really worked for low-income people. But in this case, I think what is feasible is that instead of expecting agents to go out and collect, say, $5 a month from some farmer in a small village in Cambodia, is it feasible to work with large aggregators and credible aggregators like microfinance firms or employers like MSMEs or cooperatives or even the garment factories and so on and so forth? It's possible to then use technology and provide that marketplace access through a simple plug and play, where any of these aggregators are able to offer a regulated pension and insurance solution to their customers, employees, and members without incurring any significant cost on building new technology or processes, or even learning how to do pensions from scratch. The third issue that we are finding is around the frictions that seem to have crept into the process of buying and selling financial services. Now, typically what we see is that in most countries, the way finance is manufactured and sold seems to have been designed mainly for higher income people with good KYC and so on and so forth. But when it comes to lower income people, we find that a lot of them struggle with financial literacy, and a lot of them don't have enough experience with formal finance. So putting in, cumbersome KYCs or paper-based processes tends to act as a barrier for people to step forward. If this was easier, maybe the situation could be different. And what we've now started doing, let's say in countries like India and others, is we've started leveraging open digital platforms like WhatsApp or say Facebook or Instagram. Currently, we've started working with WhatsApp, in fact, to say that can we look at how pensions can be delivered to everyday people through a WhatsApp platform. And now in this, what happens is typically, imagine a situation where opening a pension account or operating a pension account or making savings for retirement becomes as easy as sending a WhatsApp message. Now, what this does itself is that it makes sure that people don't have to then download some new app, learn that app from scratch, and become familiar with what the user interface is. They are then dealing with an app which they are using every day in their everyday lives. It's a familiar user interface. So this optimizes access and then sidesteps, importantly, the need for digital literacy, which would otherwise need to be done at scale to achieve pension inclusion at scale. The fourth point is around affordability. Now, this is a normal refrain that I hear, is that, how can you expect a farmer or a rickshaw puller or, a street vendor to start saving for retirement? And what we are finding through the work that we're doing across multiple countries is that the poor actually do save. Unfortunately, they don't end up saving for retirement. What they end up using those savings is for everyday risks that they tend to face. So it could be life cycle risks where there's an accident or a health shock and so on and so forth. And most of these are insurable risks. But because informal workers don't have insurance, they tend to use either past savings or expensive emergency loans from, say, a money lender or whatever, or a combination of the two to pay the full cost of each insurable risk. Now, this obviously consumes all of their savings, and it leaves no headroom for savings for other life cycle needs or indeed for retirement. So what a simple solution here is, can we, when we are thinking of this marketplace, can we have an integrated solution in this marketplace? When I open a pension account, can I automatically also have some insurance cover which is provided to me? Can I also have some liquidity benefits which are then provided to me? And the last challenge that we find is around myopia, which is, pensions doesn't seem to be a real problem. Let's say my son who's 19 is not thinking about retirement. My daughter who's 29 is probably still not thinking about retirement. But me at my age, I'm thinking about retirement. But unfortunately, I've lost 3 decades of compounding that I could have benefited from if I had started at my son's age or even at my daughter's age. So clearly, there is a big challenge at the level of retirement literacy and financial literacy. And I think there, what we've seen works very effectively is leveraging community-based networks, which countries like Cambodia have in abundance, and using those to be able to deliver retirement literacy and knowledge and information to motivate voluntary participation. The second thing that can be done here is that, let's say, like what India did and what Rwanda recently did, is for the government to step forward and provide some fiscal incentives, maybe some co-contributions. So every time a person in Cambodia saves $5, if the government can say, I will also put $5 in your pension account for, say, the first few years, it motivates people to open a pension account and be more regular and persistent. In terms of a general approach, what we find which works is that instead of launching a sort of a generic pension program for informal workers, which doesn't seem to be a very effective way, can we think of more segmented approaches? Can we think of the population, instead of the fact that we are dealing with 8 million people, can we say we are dealing with 250,000 domestic help? We're dealing with garment workers or footwear workers who are another, say, 750 to 1 million people. We are dealing with, say, customers of microfinance firms who are about 2.5 million people, or we're dealing with 1 million overseas migrant workers. Now, if we start thinking of the population like this, then we can design solutions and communication which is specific to a particular segment. And equally, we can, when we design the communication tools, this can help people to relate more, better to the pension solution itself. So instead of saying pensions for informal workers in Cambodia, what if I said pensions for garment workers? And if I'm a garment worker, I'll immediately sit up and say, oh, this seems to be a new pension scheme for garment workers. Let me find out what this is. Another important piece, in addition to an integrated solution, is around payments. And I think that's something I'd like to re-emphasize, is that once my pension account is open, then for the next 30 years, the only relationship I have, or the main relationship with my pension account, is going to be around digital payments. So I will need to continue to put small value contributions into my pension account. And then for the next 20 years, again, it will be a payment relationship, because I'll be getting benefits which are then transferred back to me from the pension provider. So therefore, there is a half a century of a relationship that I'll have, which will almost entirely be around good payments infrastructure. And again, what we're finding is that there are entities like, say, WhatsApp, for instance, has now launched a payment solution. So now sending a pension contribution is exactly as difficult or easy as sending a WhatsApp message. And I think it's things like this that we can leverage without investing significant capital into developing all of these from scratch. Now, let me just give you a quick example of what I mean by a segmented approach. Now, one of the populations that we see in India, it is 30 million people, but globally it's more than 100 million who work as domestic help. And these are nannies or maids or cooks or, guards, etc. Now, they have fairly regular and fairly reasonable incomes, but unfortunately, nearly all of them are not saving. And that's largely due to the initial challenges that we talked about, which is access and KYC and friction and so on and so forth. Now, if we don't do something about this, then let's say in India, these 30 million people will certainly be poor, because they will never be able to accumulate enough money on their own by the time they are, age 60. And the traditional finance model where agents go out and try and sell pensions to domestic help will not really work, because an agent is happy to come to my house to get me to open a pension account or buy insurance, but is not interested in doing that for my domestic help, who might be saving only 5% of what I'm able to save. So let me just show you a quick video of what I'm talking about. I hope you can hear the sound. This is just a 2-minute video.
This is Shanta. She's 22 years old. She lives in a little village far away with her husband and 3 children. But her family finds it tough to make ends meet. So Shanta decides to migrate to your city in search of work. You employ Shanta as your maid. She works long hours, she takes care of your children, she cooks you meals, and keeps your house clean. She sends most of her income back home to support her family, to put food on their table, and to send her children to school so they may have a better life than hers. She does this year after year after year. When she's too old to work, Shanta returns home to her little village. Her children are now grown up. They're educated and married but have migrated to the cities. Shanta and her husband now live alone. But with no savings of their own, they struggle to make ends meet. They live without dignity and will live this way for the rest of their lives. But does it really have to be this way? Let's see this again. You employ Shanta as your maid. You talk to her about the importance of setting aside a small part of her income for her old age. Then you spend just 5 minutes on WhatsApp to help Shanta open her own pension account. And you get her started by regularly putting some money into this account for her old age. These savings will be managed by the likes of HDFC Pension and SBI AMC and will grow over the years. When she is too old to work, Shanta will return home to her little village. She and her husband will still live alone, but they won't struggle to make ends meet. Thanks to you, they will now get a monthly pension and will live with dignity for the rest of their lives. This could be the story of your maid, your driver, your gardener, or guard. Just 5 minutes of your time can change 20 years of Shanta's life. You can be that change. Give Shanta a pension account today. Her clock is already ticking.
So this was just an illustration of what I meant by a segmented approach. Now, there are 250,000 people who work as domestic help in Cambodia. And I think if I just sort of put on blinkers and think, can I offer a solution only to this segment? I think it is feasible to do that using something like gift to pension. Now, I admit that this is challenging and it's not going to be easy. It's probably the most difficult end of financial inclusion globally. But what we are seeing is that it seems to work. So, I mean, just to give you a very last, this is the last slide, but to give you a small anecdote, when we were doing this in India and we had about 2.5 million subscribers in a micro pension program, when we were analyzing the data, we found that there were many people who were saving regularly, but there was one person who was also inflation indexing her contributions. So we were very curious and we went to meet her, and she was in a small village in Karnataka in India, south of Bangalore. And we said, okay, Sairaben, can you tell us how do you manage to save so regularly for your pension? And she said, Gautam bhai, what I do is I run a small goat farm. And every year I nominate one goat as a pension goat. And then when it is Eid, I go and sell that goat in the market. And whatever money I get from that goat, I simply put into my pension account. And that seemed to be fantastic. I mean, we had never brought goats into the retirement literacy narrative when we were dealing with Saira Bano or anybody else we were dealing with. And then we said, okay, but how do you, we're still curious. Who told you to increase your pension contributions every year with inflation? She says, I actually don't do it. That's all done by my pension goat, because what ends up happening is that if I've sold my goat for, say, $50 this month, next year it sells for $55, and the year after it sells for $65. And therefore, inflation index seems to be built into Saira Bano's micro pension goat strategy for saving for old age. And I think this is the kind of stuff. So if we can get, if we can make retirement literacy effective, if we can make pensions easy and simple to access, and make them as intuitive as sending a WhatsApp message, I think we can have significant outcomes and a much, much better crack at solving the old age poverty problem. Thank you very much.